Welcome to the 2023 Economic Depression and Preparation Channel. Thank you for joining me on this Wednesday, middle of the week, October 4th, 2023 edition. Please be sure to subscribe for the latest interpretation of financial news as it becomes available. Today we're going to be talking about the labor force, workforce, the strikes, and AI being replaced. Oil continues to surge, and the jobs report is going to be coming out tomorrow, Thursday at 8:30 a.m. Eastern Time. Now, ladies and gentlemen, more than 40% of the labor force is to be affected by artificial intelligence in the next 3 years, according to a Morgan Stanley forecast by CNBC. This came out Monday, and I thought this was interesting because the growth of artificial intelligence is going to affect all careers, whether in medicine, government, business, private sector, transportation. Everything is going to be affected by this artificial intelligence that is pushing forward. This is what I like to call the Internet 3.0. Internet 2.0, of course, was the big, invention of tech and Apple and all of that, Google services and recording services and all the different things, Amazon Web Services. But now we're in the part where Internet 3.0, where artificial intelligence is integrating into our real life through augmented reality, and how that's going to affect job market. The job market is going to be increasingly, as you know, automated, and jobs we're going to be losing jobs to robots. We're going to be losing jobs to, people from other countries as they come over and have more qualifications sometimes than a lot of the Americans here, and do things for a cheaper cost, as you know. And so that can be a good thing, but it also can be a bad thing because jobs can go down. The quality is not going to go down, but the wages offered are going to go down significantly because these machines, these robots, these drones can produce more at a fraction of a cost, and they never get sick, they never complain, they never have grievances, and you don't have to pay attention to that. So this is what we're looking at coming up later. Now, also, oil surges above $94 a barrel. Now, you think as we head toward fall and winter that you would think that oil will be getting cheaper as they switch to the winter blend of gas, but that's not the case. Oil continues to maintain above $90 a barrel, according to CNNBusiness.com. The markets are up today only by 100 points, at 0.39%. S&P 500, NASDAQ, all up in the green. But as you know, this inflation problem continues to affect gas, food, utilities, and transportation. Huge costs all around across this country. And this is going to be a big problem because, we have gas going up at a time where people are working more, whether they're doing side hustles on their main hustle, whether they're taking kids to different various parts of school, or school has started, and we're getting into the full sports season and the full academic season now. Midterms are coming up, and finals will be coming up for a lot of kids in college and high school and etc. And they have to travel, and these prices are going to continue to mean that airline fares are going to be higher through the winter. Bus, cruise fares, any type of transportation, train, any type of transportation is going to be higher. And so this means that we're going to have to conserve. Even though the national average of regular gas dropped to $3.83 a gallon on Wednesday, according to AAA, that's 5 cents below the 2023 high set earlier this month, we still have an opportunity to hit $4 a gallon nationally as we get through the month of October. And as you know, Californians are already paying $6-7 a gallon for regular gas already. And so it's going to be over $100 a barrel. I guarantee you that before the end of this year, 2023. U.S. job report forecast over 170,000 new workers and 3.7% unemployment officially. Now, shadowstats.com has unemployment above 12% right now. You and I know that number could be higher. It's fudged. It's based on people who are actually applying at these services. Only 170,000 new workers to the force. So the labor market's beginning to cool off, but it's still very tight according to this report. You always see these signs around. Many of you see these signs. First it was hiring bus drivers, then it was hiring at these gas stations, convenience stores. You see these now hiring signs at fast food joints, even teachers that say they're now hiring for this in some parts of the economy. However, people are saying they're just collecting a database of applications, a database of people, workers, available workers, are not actually hiring, but maybe one or two of these people out of the pile of 200 to 300 people they have, applications they have. So the United States is not adding as much jobs as they say they are. We're going down on a downward trend, and also the unemployment rate is going up. Now they're saying it falled here from 3.87 to 3.8 to 3.7. However, you got to realize that not a lot of the jobs are advertising these jobs. A lot of these jobs are being filled internally, both in the public sector and private sector. So the number of job postings has fallen, and that's as a result, the number of jobless claims, unemployment rate has fallen. So that's what we have to look at too. Okay, now everybody knows that wages have not grown to match inflation. Okay, and real inflation right now is at what, 15% realistically. Official inflation data numbers right now are at 5.5% or 4 to 5%. We know it's much higher than that. However, wages have not kept pace to meet inflation. It never has. It never has kept pace for the last 20 to 25 years. Now, this is too high for the Fed. The Fed said the rise in pay and likely to stay at 4.3%. That's also too high. So since wage growth is not matching, and this is where we have the results, is labor union strikes. As you know, auto strike. We have nurses striking. We have the Kaiser Permanente strike in California. So many different moving pieces here because everybody's saying they want to get paid more. Well, if we want to get paid more, that also drives up the prices of the input costs for these companies. And that means that inflation is here to stay through 2024 into 2025 as well. No matter who gets in office, it's still going to be a big problem because we have a deficit of wage growth in this country. So as a result, ladies and gentlemen, that's why it's important for all of us to continue to plan, not just mentally, spiritually, and emotionally, but also we have to plan financially. And that means that we're going to have to make some sacrifices here in terms of, cutting back on the trips we take, cutting back on the gas trips we take, make one trip to do several stops, whether that's, for food, for leisure, for work, picking up the kids, whatever. Using one stop to do that, or one or two stops during the week to do that, versus making lots of tiny little stops. Maybe that requires you downsizing to a car other than electric. If you didn't want to get an EV, maybe that causes you downsizing to a small sedan like a Civic or a Camry or whatever type of car that's really gas efficient. Prius. So a lot of this is going to be happening with a lot of Americans in America because of the way that the economy is slowly falling back to a cutback. I wouldn't say it's going to be a massive recession or depression, but we are going to experience a prolonged slowdown as noted here. And because of this shutdown, the government shutdown that's coming too as well, they extended 45 days, but that's going to be another issue, okay? We're coming to the point now where we're not going to be able to meet our interest payments on our debt. We have $33 trillion of debt now, and the interest payments are catching up to us fast. Okay, so it's only a matter of time. Nobody can say when or where that we become sort of quote unquote insolvent. They'll always have money to pay things, but it just wouldn't be. More so, we'll be coming into getting a universal basic income, which nobody wants. Because that means that, you still won't be getting enough to pay your bills, but you'll be getting a check, kind of like a kind of a good welfare check kind of thing. So nobody wants that to happen. Unfortunately, we're moving more and more towards that direction. So continue to stock up, prepare food, medicine, water, clothes, durable clothes, and shelter should be your primary concern. Everything else is secondary at this time. For the next couple of years as we go through this slowdown, this transition to an automation economy, which is going to hurt everybody from top to bottom. So thank you for listening. I hope to talk to you more tomorrow after the jobs report numbers come in tomorrow morning and then later that afternoon. God bless you. Talk to you soon.